Welcome to ShortView Trading. This is your morning market hit for Friday, 24th of April. What matters today for traders? So after some initial strength in the trading session in the US yesterday, the S&P closed broadly flat and is slightly weaker overnight. S&P futures are now trading around 2770, which is a level they effectively first reached on the 9th of April earlier this month. The pattern in the Nasdaq is fairly similar, with the prices currently at around 8550, which is a level the Nasdaq first reached on the 14th of April this month. Whilst thirdly, if you look at the Russell 2000, the mid caps, they are also trading at a level they first reached on the 9th of April. Now, interestingly, if you look at the 9th of April, that was the day the Fed announced its extra big stimulus package, the $2.3 trillion of lending that they put together in various different programs. Part of one of those programs was the buying of US high yield debts, with this being done via ETFs in the high yield space. And interestingly, if you look at high yield spreads since the 9th of April, they're broadly in line with where they were. A tiny bit narrower, 11 basis points, but nothing meaningful. In other words, the spreads are pretty much flat since that date. And indeed, if you look at the chart in front of you now, price of a US high yield ETF, you can see it peaked on 9th of April. Similar points can be made about leveraged loan prices. And equally, if you look at muni spreads, there's signs of stress coming back into the system there. No doubt not helped by comments from Mitch McConnell the other day about allowing certain states to go bust. The LATAM sovereign bond spreads have widened out again and aren't far off their widest that they reached on 23rd of March. So yes, Eurozone spreads, some of them narrowed a bit yesterday on the back of the EU leaders meeting. It'll be interesting to see what happens to them today. But a lot of stress remains in the system, and it hasn't really eased since the Fed's last big announcement on 9th of April. So we're left with a key question. With markets broadly sideways for a couple of weeks and stress sort of flat or even building a bit since then, the key question is, are markets rolling or are they consolidating? To our mind, with that stress picking up, plus the positioning of our short-term models, it seems most likely that they're rolling. And indeed, if you look at the short-term put-to-call ratio, you'll see that even more downside protection was taken off yesterday. The short-term put-to-call ratio is pretty much back on sell. Risk appetite's been high and has been rolling in the last week or two, and momentum's been rolling as well. If you look at our technical short-term scoring system, we're rolling over from sell levels reached in recent trading sessions. So adding it all up, we think the risk-reward favours playing the short side still, and in that respect it's interesting, of course, that in terms of the number of trading days that this relief rally's been ongoing, it's bang within the normal range. For more detail on how we're playing this, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today? Well, of course, as articulated in recent trading sessions, all the sort of key usual stuff. How much stress is growing or easing in the financial system? What's the price action like? And in particular, I'm interested in what Eurozone bond spreads do today, following on from their initial reaction to the EU leaders meeting yesterday. Added to which, in terms of key macro, durable goods orders come out of the States. It's a March data point, so it's a little bit of early insight into CapEx spending under the first part of the lockdown. And over and above that, the US earnings season continues with key earnings out today once again. So that's it from us. That's your morning market hit for Friday, April the 24th. Please do subscribe on YouTube, LinkedIn, Twitter and or Facebook. Simply search under ShortView Trading. Thank you for listening. Stay safe and trade well.